Anybody that hears that I'm a real estate broker asks me about this new capital gain taxes and what does it do. The federal government just introduced a new change into the budget, and I'm here to talk about it. This is everything to do with taxes, the capital gain taxes. So this new change that the government is introducing is projected to bring in $20 billion. And I want to really break this down for you in a very simplistic form to have a better understanding of how are they planning to do this. Now, the government says this is going to target just 40,000 of the wealthiest Canadians. Most people don't believe this, and this is why it has brought in a frenzy of questions. A lot of my own clients have been questioning me about this. Anybody that hears that I'm a real estate broker asks me about this new capital gain taxes and what does it do. So if you're new here to this channel, my name is Clement. I'm a real estate broker and I focus mainly in the greater Toronto area, where in this channel I cater mainly towards homeowners. Whether you're a future homeowner or a past homeowner, you're just thinking about getting into the market, this is the channel for you. I talk about everything to do with real estate to guide you in every step that you're about to take on. So as you're watching this video and you're gaining any sort of value, share it with anybody that you know. Like it, subscribe it. Most of my clients have been watching this and ask me how can they support. I just ask them subscribe to it, like it, share with as many people as possible, and just give me some feedback, comment on it, and I'll be able to get back to you as soon as possible as well. Now let's get into the main issue at hand. This is the capital gain tax. First, you might be asking, what is capital gain tax? So capital gain is essentially the money you make on an investment that you bought. So be it real estate, be it stocks, whatever business you're in, whatever investment that you've purchased and it has made a profit and it has appreciated, that is capital gain. So for this video's purpose, I'm going to give you a real estate example, which I'll be covering throughout this whole video. So for example, since we focus mainly on real estate here, I'm going to use a residential purchase as an example from when you purchased it, and then let's look into the numbers in terms of capital gain taxes and see what are these changes that have occurred. So let's say you purchased a detached home for $800,000, let's say in 2017, and it has now appreciated to $1,100,000 today. So when you sell this house today, the appreciation of 800 to 1.1 million is 300,000. That 300,000 is what is going to be taxed, and that's what we call the capital gain taxes. And as a side note, for those who are watching this and getting concerned, if this is your principal residence, then there's no capital gain taxes on it. This only applies if you have an investment property out there or you have another property that's not your principal property. That's the only time this will apply. So before we get to the changes, I want to talk about how this works in today's market. Today, 50% of your capital gain taxes are taxable. There's a name for this. It's called the inclusion rate. So to use our original example of you purchasing your property for $800,000, and now it has appreciated to 1.1 million. So that 300,000 appreciation is what we're really going to be covering on this to show you the clear difference. So let's apply this 50% rule on this 300,000 appreciation that we've just had in terms of the example. 150,000 of this is going to be counted as income. So this 150,000 is going to be added on to your total income tax of that year. And your total tax rate will then be decided on how much you made on that year. A quick side note on this inclusion rate, I did some research on this and I saw that about 20 years ago, this was at 75%. And even before that, that number was at 66%. So this new change that we are experiencing today is not completely drastic, it's not completely new. It's just that it has taken a very long time. And so we're getting this whole new reaction about this. And because of obviously how the interest rates are, with the way the current market is already. So that's why we're getting this kind of attention, this kind of drastic change with the news and the buyers that are in the market today, or the sellers that are in the market today. Now let's get into the main change that is being introduced in 2024. The first thing to note here that I really want to mention is if your capital gains are below 250,000, then your capital gains are going to remain as it is currently at 50% inclusion rate. So what is this change that we're talking about? If your gains are over 250,000, you're now going to be taxed at 66%. So this is the big change that's being introduced in 2024. Essentially what the government is trying to do here is to bring in more revenue from those Canadians who are regularly making more money from this capital gain taxes of above $250,000. And this is going to be introduced on June 25th of 2024. So in the next 30, 45 days, you're going to see a lot more investments coming into the market because they're just trying to beat that June 25th date, because a lot of investment obviously want to make their money back, particularly if you're just bordering that 300 to 500,000 appreciation. Yes, you definitely want to take advantage of this. And here's where professional help obviously comes in. And if you're 9 days or 45 days, as you can see, or 90 days away from making a decision whether you want to buy or you want to sell, reach out to me. I have a link in the bio up top where you can actually reach out to me. I have a lot of my past clients who have preferred calling me, or even some of them really preferred Zoom calls, and I've noticed this. So you can always just send me a quick text or click on the link below and just schedule a time that's preferable to you. And we'll get into a quick conversation and see if it makes sense for us to work together or not. Now, I really want to make a side-by-side example here for you to have visual example. That way you're able to see how this looks currently and how it's going to look after June 25th of 2024. So we're going to use our original example of $800,000 purchase, which was 2017. And let's say we're selling this house today at $1,100,000 in 2024. So that's a really good appreciation. So we're looking at appreciation of $300,000. So let's look at this inclusion rate. So today it's at 50%. So 50% of 300,000, this is 150,000. So this 150,000 is what is going to be taxed. And this is the 150,000 that you're going to add on to the income that you've made for that year. And in total, that's what you're going to be taxed at. Now, for the new change that's coming up in June 25th of 2024, the inclusion rate is going to be 66%. So if we take that $300,000 appreciation and we do 66% of that 300,000, that is going to be 198,000. So that 198,000 is what you add on to the income that you've made for that specific year. And in total, that is what you're going to be taxed that year. So with all this said, there's some people that are going to be exempt from all these changes. And these are those people who have saved tremendous money into your tax-free savings account and any other tax-sheltered accounts that you have your money in. Those ones are not going to be touched. So anytime you withdraw money from there, you're not going to be taxed on any capital gain taxes on that. So you don't have to worry about those ones. So it's only if you have investments, if you have stocks, if you have some sort of businesses out there. Now the capital gain tax on that is where you're going to be adding on to your current income taxes that you have on that year. And if you have your principal property that you're living in, whatever appreciation you've had, you're not going to encounter any capital gain taxes. It's only if you have another property. Now that property, if it has had appreciation, now that appreciation is where you're now going to encounter the capital gain taxes. So it's not for your principal property. You don't have to be concerned about this. I know I have clients who are reaching out to me and they're talking about these things, what's the government trying to do to us, but it's not going to affect you. So watch out for my next video. I'm going to be talking about the condo market, because this has really hit the condo market, and what we're experiencing today, the condo market is really having a hard time. But until next time, reach out to me if you have any major questions, or if you want to have a quick discussion about anything to do with real estate. I'm here for you to help as much as possible. Until next time, see you in the next video. Thank you.